Hi, and welcome to the Stockscores Market Minutes for October 2nd, 2013. An invitation to subscribe to my free weekly newsletter at stockscores.com/newsletters.asp. All right, this week we're going to talk about the 4 pillars for trading success. They are the entry decision, the risk management process, the exit decision, and managing your emotions throughout the entire process. Most people tend to focus on the entry only, but to be successful as a trader, you must master all of the pillars. And in fact, if you focus on the risk management, exit, and emotional control more than the entry decision, you will probably be far more successful than most traders. Now, I did a little study this afternoon on my trades made during the month of July and simply changed a little bit of my rules on the exit strategy, and it impacted my overall profitability for the month by about $15,000 or $16,000. All I did was change my rules for exit. I didn't pick any different stocks. I didn't take more risk, but simply by working on the third pillar, I was able to increase my overall profitability. Now, many of you may find that you have a good strategy, but it's your ability to follow the rules of the strategy that hurt your performance. And in that case, you want to work on ways to better control your emotions. It's a good idea at the end of every week, month, year to look at the trades that you have made and analyze each of these areas, each of the 4 pillars, and try to figure out where you can improve your performance. All right, this week I'm taking a look at a longer-term view of the overall market. This is a 3-year weekly chart of the S&P 500. We can see that the market is in a nice upward sloping channel. It's been that way since late 2011. But we are at the top of that channel now, and therefore there is some risk that we will get a short-term pullback in the overall market. There is no sign of a pullback. There's certainly nothing to tell us that there's going to be some selling pressure next week, but we know that when the market reaches the top of the channel, there is an increased chance for profit taking in the short term. So I remain bullish on this market. However, I think that a little bit of caution is warranted. The TSX has been locked in that sideways trading range for basically the duration of the upward trend in the S&P. So while the S&P has been going higher, the Canadian market has been grinding its way sideways, and it hit resistance at the downward sloping trend line that I've drawn in red on this chart, and it got stuck there this week. Doesn't look like an overly bad market, just doesn't look like a good market either. There's not a lot of opportunity in the Canadian market right now. Now, if we can break through that red line and start to actually put together a rally moving through that overall resistance that out of that trading range that we've been in for some time, well, then the market's got a chance for success. Treasuries on the long-term basis broke down through the neckline of a head and shoulders topping pattern, and that points to lower prices for treasuries, which means yields are increasing. Now, we've already seen yields increase quite a bit in the last few months, but the outlook here is that yields will continue to increase as bond prices fall. Emerging markets have bounced nicely off of support over the last 5 or 6 weeks, and they've got pretty good upside to the next level of resistance at the red line. Generally not a trending market. We're stuck in a sideways range for a year and a half or so, but things are improving in the emerging markets, and I would say there is slightly more upside potential than there is downside risk. US dollar is also stuck in a sideways trading range, and it is really trendless. I wouldn't say it's a strong upward trend, strong downward trend. We've had a little bit of a pullback in the US dollar over the last 4 weeks, and that's probably what has given support to the emerging markets and the Canadian market for that matter, but really not a strong signal that the US dollar is going to go one way or the other. It looks to me like it's simply going to grind sideways in this long-term range. Now, gold, as we all know, has been in a bearish trend for some time. It has broken the downward trend line, and so I think we could be in the early stages of a bounce back in gold, but I really don't see much potential for a upward trend in gold in the longer term. Yeah, we might get a little bit of a rise here in the short term, but that strong upward trend that we saw back in 2008, 2009, 2010, there's really no sign that that is going to resume again. The oil market has broken its downward trend line over the last 4 weeks, and it looks to me like that strength could continue. I think in the short term there's a little bit of a risk of some profit taking in oil. Often when we get breaks through resistance, whether it's a trend line of resistance or horizontal lines of resistance, we get a little bit of short-term profit taking, and that could certainly happen in the oil market. But the longer-term outlook is actually positive because we have broken that downward trend line, and I expect oil can rally up to the next line of resistance, which I've drawn horizontally in red. So I am bullish on US stocks. They continue to be strong, but are approaching resistance at the upward envelope of that channel, and therefore some profit taking should be expected soon. Canadian markets are quiet with few opportunities. There is the occasional opportunity, and I do see signs that the speculative mining and energy markets are starting to turn, but that's pretty speculative at this point. Gold is trying to bottom, but it has lots of work to do. And oil has been stronger than expected recently, but I would say risky at these levels for a short-term pullback. My longer-term outlook for oil is positive. Well, that has been the Stockscores Market Minutes for August 2nd, 2013. Have a great week in the market and trade well.